Welcome to Alpha Bytes, where each week I sit down with some of the best crypto analysts and researchers to find undiscovered opportunities. I'm your host, Marconi White, and today's show is hotter than Billy's temperature when I pour him a cup of Nespresso. I'm going to ask the guys if this is the most brutal crypto winter ever, but first, JJ might be ready to mop up bare tears as Dixie shows fresh signs of weakness. Ben's asking if Bitcoin's dominance is about to create a Bitcoin milkshake. Ray explains how Bitcoin mining can be beta to Bitcoin's alpha. God, that's a lot of Bitcoin. And King Cody, well, he likes or spikes 3 projects, including Telegram launching a coin mint factory, Silo Finance launching a fork, Pepe creators selling their token, and much, much more. I've got Ben, Lilly, JJ, Ray, and Cody in the studio. Gentlemen, welcome. Always a pleasure to have you here. We're going to kick it off with the market update, coming off the fresh news of Grayscale winning an appeal against the SEC. But before we do, if you're a bear market warrior who has ideas on what this industry needs most, we want to hear from you. We already heard from a few of you. Excellent insights. We want to hear for a few more. So please take a few minutes to click the link below, answer just a few questions that can help us better tune our content, help make this industry what it needs to be. Let's get on with the show. All right, JJ, I'm going to turn it over to you. Last week, you came in here at the Green Reaper and painted a very, very dark picture of what was about to happen. And it looks like right now we're seeing something very different. So tell us, what's the market look like? Where are we going from here?
It's over. We are back. So,
all right, we're back. Love it. Tell me
like
more.
You mentioned last week was just about, I think, the most bearish I've been in. I don't even know how long. I don't even know if I was that bearish in 2022 at any point. But something interesting happened after we recorded. We had that drop down from, I believe we were in the high 25s, maybe the low 26 at the time. And we dropped down pretty quickly to the low 25s. But what happened there is that BTC didn't make a new low. So you had this huge influx of short interest there at the lows, and that created the fuel for what we're seeing now, which is a massive short squeeze on the news of Grayscale winning the SEC case. At the same time, so we had that big breakdown to the low 25s as DXY was moving over that critical 104 zone. And then within a couple days there, gold made a low, which I found interesting. We started to see it rise up off of its lows in the high 19s, low 1920s. So as it started to move up, DXY was showing signs of topping out. We kind of had all the most DXY bullish catalysts imaginable come in over the course of the Jackson Hole speeches and whatnot. Powell stuck to the higher for longer speech, and DXY was moving higher, but it wasn't really breaking up the way you would expect it to on such news. And then today, probably not coincidentally, we had a jobs report that was bearish for the jobs market, which is ultimately bearish for the dollar, as that typically precedes weakening in the dollar. So as DXY dropped below 104, within minutes we had news of this SEC announcement, and then you just saw Bitcoin take up from there. And right now it's squeezing out all of the short interest that has entered since that critical drop from 28.5 a couple weeks ago. As I mentioned last week, Bitcoin has been on a shot clock in my mind to recover lost moving averages and just repair its technicals into the monthly close. Right now, it's certainly doing that. So we are firmly back above the 200-day moving average, which is around 27,400. So this is a very bullish development. If it can regain this momentum, possibly eclipse the 100-day and 50-day moving averages, which are around 28.5 and 29.3, I believe. So if it can reconquer those into the monthly close, I think we're in for a very bullish September. Obviously, all the catalysts are there. And if that's paired with a sinking dollar that's showing signs of pulling back after a mega rally in August, good things ahead. So I guess we were a good bottom indicator last week. Let's hope this continues.
And that's the reason you want to check in every week, to hear us be the bottom indicator so you know when to buy. But although this is not financial advice, I already saw on Twitter calls for 40K. What's your sense there? Is everyone getting ahead of themselves?
I hate to keep beating a dead horse there, but it's all DXY dependent. So tomorrow we have GDP numbers coming out, and that's obviously going to have huge impacts on DXY. So if GDP is better than expected, we can expect a stronger DXY, as that means the Fed's going to have to tighten higher for longer to reach their goals. But if GDP is showing signs of pulling back now, then I believe we could see a weaker DXY, as that means that kind of the Fed's inflicted their will upon the market, and they might be, at least the market would take it as the Fed's more likely to begin cutting rates sooner. If DXY slides back below 100 after this, like, it's still above all of its major moving averages right now, so I'm a bit tentative on that. It's 200 days at 103.09. So I think if we see it slide below 103 into the monthly close, the odds of it going back below 100 in September are pretty good. This could have just been a short squeeze like we mentioned last week and a long squeeze on Bitcoin. So if we see that reversal, say BTC over 29.5K and DXY below 102, I think the odds of 40K in quarter 3 are extremely high.
So
Does that make sense, or am I
yeah, no, I
speaking too
think so.
theoretically?
I think it's making sense. You have to ask the question. We just had a potential major catalyst with the Grayscale verdict. Now, I haven't been able to read any of the details yet, but my understanding is that this looks like a massive win for Grayscale to enable them to be able to convert the trust to an ETF. And that would signal to the market that the other ETFs that are awaiting their decision are probably in pretty good standing, that they'll eventually get the go ahead to create an ETF. Do you agree with that sentiment? Is that enough for us to carry higher?
I
If
think it's
Dixie
it's
looks a
perfect
little
timing. Like we
perfect
saw
timing?
2 weeks ago, all that we remember we were talking last week. We were saying that there was this outlier chance that what we saw during that big drop from the 29s to whatever that was, 24 or so, it would have been the perfect thing that you'd want to see because it wiped out all of that open interest that had been accumulating since the initial announcement of BlackRock's ETF. So there was just excessive perpetual futures being long, which is ultimately bearish because they have to close out at some point. So that carries an overhead risk in the market the higher it goes. So the fact that that was all wiped prior to this announcement, I think that's a good sign. And then also we have, I believe, BlackRock's deadline for the first ETF for a decision from the SEC coming one way or another is Friday. So this is kind of setting the stage for an approval there. I'm not a legal expert, so I don't know what the odds are based on this, but I would assume it's pretty likely. I don't think the SEC wants to get embarrassed again after just suffering that loss. So in terms of like what we see in the futures markets and things like that, the market looks prepared for a leg higher, and I think the ETF would be the catalyst to send it there. So just, yeah, very bullish right now. If it can hold this breakout into obviously the weekly close, that's going to be critical, but it's looking very good right now.
Into the weekly close and into the end of the month, we have to be watching for that. Ben, what is your take on this? Are you consistent with the view JJ just put out there? Do you have anything else to add, or do you have a counterpoint?
Not much to add regarding the price action. I think JJ really did a great overview there, as always. One thing I would like to mention, though, is back in April, we had Gary Shades Gensler show up. And ever since then, it's just been trending downwards in terms of his sway in the market and kind of having things go his way. It's been going absolutely wrong for him ever since. And this is just another mark against him. And it's almost like it's getting fully unwound right now. If we were to look at, remember, I believe we discussed his influence being like an RSI indicator, and he's essentially overextended his powers in the market, and we're seeing it get unwound right now. And I don't think it stops here. I think if anything, it just raises more questions about how the SEC has acted against all of the entities involved in the space, especially with the most recent NFT litigation that just hit this week. The SEC is clearly overreaching, and it gives Congress, who has been just chomping at the bit to go after Gary for not just crypto, but for other topics as well, including ESG and hedge fund rules. It gives them sort of that catalyst that they've been wanting to really just kind of, I guess, drum up sentiment against him.
It's hard to imagine them choosing to fight against, like, say, what are you going to do now? You just lost to Grayscale, who's one of the most incompetent companies in the world, essentially, right? 2022 proved that. I think we could say that objectively and be fair. And now, what are you going to do that you lost a case against Grayscale? Are you going to fight against BlackRock? Like, there comes a point where somebody like Gensler is a politician. They have to play to the public appeal, and I don't think a legal fight against BlackRock would be in his best interest, because they would sue too, right? Why wouldn't they if they lose?
This isn't looking good for Gary Shades Gensler. Gary, just open invitation. You're always welcome on Alpha Bytes to come and share your view and maybe tell us what exactly we're missing here. We promise it'll be a friendly crowd because I'll put everyone else on mute. Ray, I want to give you a minute, and that is 60 seconds to bring something in here, because I think you had something you wanted to share.
Oh, wow. I don't think I can do it in a minute. That's tough.
You can do it. I've got faith, Ray. I've got faith.
I need to condense what I wrote. All right, let's see. Well, this is why I aped without any reservation on that big drop down 2 weeks ago, because this is what Bitcoin does. It's in its nature. It does big wicks like this, and I prefer to not be sitting offside or on the sidelines. I have kind of a bearish point of view in the short term. Is the Grayscale victory a game changer? Possibly, but I don't think so. I'm not a financial law expert or expert in any law for that case, but my understanding is that the blockade in front of Grayscale is now removed, and they can get in line to now submit ETF applications just like every other Tom, Dick, and Harry. we got a euphoric pop today, and it's a sentiment boost that might last until Friday, but we've got various economic data coming out throughout this week and some other ETF applications decisions to be rendered leading into Friday. So there's still, like, beyond today's excitement, there's still macro headwinds and unknown unknowns on the horizon that could manifest into FUD or downside price catalyst. And I think the biggest thing for me is the PBOC basically telling Chinese companies, buy Chinese stock, do it now. Preferably, yes, that's an order. So I think that that's where the issue is. DXY may turn into a shelter as things heat up in China, and we know about that relationship between Bitcoin and DXY. So that's basically what I have to say right now is take a few deep breaths. If you got profits, take them, but get to a high point and make sure that you're seeing everything properly, that you have the right vantage point. This might not be bull market go ape time. And that's it. I would say some stuff about price, but I want to respect that 1 minute.
Well, you hit 2 minutes, so I'm glad the respect is bringing it back, rolling it back. You went from you went from a 3-minute Ray down to 2-minute Ray, so I'm going to give you a little bit of applause there. But no, I think it's actually really important for people to have a counterpoint and see a different perspective, particularly when the markets are going euphoric and you've been sitting here perhaps on the sideline with some dry powder waiting for something to kind of kick in. We're not out of the woods yet, Ray, as you just pointed. And I think the reality of the law will come forth in the coming months, and nothing is a given. Even us who, I think myself included, I'm rather bullish on the fact that I do think ETFs will eventually come. And Ben, as you pointed out, that the era of Gary Shades Gensler may be winding down, or at least his power may not be as powerful. But that doesn't necessarily give us the green light to just ape, or at least I wouldn't suggest it. So, all right, JJ, thank you for the detailed market.
Shout out to Ray, by the way, for nailing that bottom.
Yeah, that's right.
He was the only one saying, "Hey, I bought you idiots."
That's right. That's right.
No, I was the idiot.
No idiots on this show. Just various perspectives. All right, Ben, we're going to move it over to you. I think you are looking at the Bitcoin dominance and you're asking yourself, is the milkshake about to get poured? So Ben, tell us what's on your radar and what are you looking at?
Yes. Okay, so to start off, I'd like to ask everybody just a quick question. Do you remember where you were on April Fool's Day 2019?
Yes.
I'm sure for all the Bitcoin veterans and crypto veterans, you know exactly where you were on that given day. But for those that don't know, I'll give you a quick clue. We were trading below $6,000 for about 5 months. Layoffs were happening left and right. It was about as negative sentiment-wise as you could get. Then suddenly, on that April Fool's Day, Bitcoin went ahead and printed a massive candle, 17% on the day. Just a straight up, for everybody who's watching the recent Mario movie, just a Mamma Mia type of candle. So now I bring that up today, given the events that took place around the SEC regarding Grayscale. I see a lot of similarities in the market right now in terms of price action to what took place in 2019. Even though we won't see a 10% plus type of candle unless BlackRock ETF gets approved, I still see this thesis holding true. Okay, so I bring this up, the 2019 comparison, because I anticipate a trend to unfold regarding Bitcoin over the next few weeks and possibly months. To really dive into this point, it's best to have a Bitcoin dominance chart on your screen. That's BTC.D on TradingView if you're following along. And you'll want to zoom out a bit to see how this looked going back to late 2018. We got a nice double bottom around then a solid run up until Q1 2019. And then we trended back down for a couple of months and then got the massive reversal on that April Fool's Day. And that reversal that brought BTC dominance higher happened all the way until the end of 2020. Again, today reminds me a lot of that reversal that took place in 2019. Here we are, we're in a winter. Everybody's very low energy. Nobody cared about Bitcoin and crypto. It's, again, similar sentiments as we have right now that we saw back then. And once that energy gets renewed, Bitcoin led the way for the next several months, which I'm anticipating right now. And I have to imagine the pattern of meme coins garnering most of the volume on exchanges of late will cease. And for me, this is exciting, especially because the biggest catalysts for price action are still on the horizon. And those catalysts are for Bitcoin, these being the ETF decisions.
Yeah, those are some really big decisions coming up. So I'm excited to hear more about that. So what does this mean for the other coins moving forward? I think that's a question I think many of the audience are asking already in their minds.
Yeah, so I'm not feeling great about other tokens at the moment. Reason being is if we compare an ETH BTC chart, which measures the price of ETH relative to Bitcoin, and compare this to the dominance chart, we can see ETH BTC didn't fare too well in this time period in 2019. Bitcoin went ahead and earned the lion's share of liquidity, which is another way of saying the Bitcoin milkshake effect unfolded, where Bitcoin sucked a lot of liquidity out of other tokens. And once it was done, that effect, it was time to take the first step down the risk curve to ETH. So for now, I want to see if this dominance theory holds. If it does, I'll focus in on Bitcoin until I see the ETH Bitcoin drop I've been waiting for. And it won't require me to sit right in front of my computer and wait for the exact moment and modern tick to happen in the market. These things require patience, and scaling into these positions is on the order of weeks and not minutes. And I don't think most have that type of patience in crypto. And it's why many will chase risk way too early in this cycle and likely miss out on some of the biggest moves. So patience is the virtue, and it's the key word here today.
Patience is keyword coming from Seth.
Just to add some confluence there, what you're mentioning, the similarities between right now and 2019, they're saying, low volatility and excessive short interest at a time of low volatility. So that setup is, I think it's there too for a big rip from here.
Ben, I want to ask, what effect do you see staking and liquid derivatives having on Ethereum's price against Bitcoin? Because I think when you look at the dominance chart historically, you didn't have that factor playing into it. Do you think that matters?
It's a great point. And when I look at that chart, I feel like the drawdown won't be as severe because of that effect. And you won't have as much, what's probably the best word, is just stagnant supply that can easily just be sold into the market, because a lot of ETH now is held up in liquid staking derivatives. It has more use cases because more people are building on Ethereum. So they're using it as a commodity to go ahead and mint a smart contract or mint new tokens. And a lot of people use it as store of value or go ahead and get yield. It has all these use cases that it didn't have prior. So I don't anticipate that drawdown would be as severe as it was prior, but it should be a noticeable move when it does unfold.
And so I guess the next question, it will be a noticeable move. That's your anticipation. What about going further off, let's say the risk curve, and looking at other L1s? Do you anticipate them following a similar pattern where once Ethereum kind of drops to a certain, on that dominance chart, it drops a certain level, they'll be even below that and would have almost a springboard effect to come back?
It's a great question. And either it's going to be the L2 narrative is going to start to take off around that time, or it's going to be an app chain thesis that goes on, or maybe Solana or Avalanche or one of these other, L1s or even EVM compatible L1s will start to gain interest. I don't think anybody has quite in mind what that's going to be just yet, but I do believe it has. I think a topic we're going to hit on later is going to drive in on this a little bit more, and I think that narrative is one that we should be watching out for. So I guess stay tuned to maybe we can talk about that point some more later.
Yeah, absolutely. Yeah, definitely want to get Cody's thoughts on that with all the work he's doing to look at those chains. So I think patience, P, is the right word for today, especially, again, when we see these market moves coming off of the news of Grayscale. It's exciting, but patience to look for the market opportunities. Any last words you want to put on this, Ben, before we move on to Ray? Because he's got some good alpha to share.
Yeah, I mean, there's a lot of things happening in the next week or two regarding decisions with the SEC and the ETF. So there's no reason to really just ape into anything like this right now. I mean, even in the April candle that happened in 2019, there were still many entry points to be had later on. So really just create your thesis, stick to it, and execute. I think the saying is it like think slow, act fast type of deal, where you go ahead and you really form your thesis. And when it's time to act, you can just go ahead and think clearly without hesitation and pull the trigger.
I like that. Good recommendation for anyone who's listening. And if you want to hear more about what we're seeing in terms of the dominance chart and our analysis, I suggest you hit the like and subscribe button so that you're here next time we bring it up. And you share Alpha Bytes with those who you think would benefit from this information, because we all want to succeed, and we want others who we know and love want to succeed as well. That's why we bring them into the fold. All right, Ray, I'm going to come over to you, and I'm very excited to talk about what you're about to bring up. I think you just had a really interesting discussion about Bitcoin mining, which I would suggest anyone go here if you're interested in what's happening in the industry. But tell us, what are you looking at? What's on your radar right now?
Well, Bitcoin mining stocks continue to track and outperform Bitcoin price, but there's a caveat. So my chart of this week is a list of stocks from TradingView, which shows 9 Bitcoin mining stocks, and Coinbase, or Coin. All are up double digits today, some even 30%, which is impressive for a one-day stock move, especially. Even in crypto, getting like a 30% gain on one day is notable. So, that's nice that Bitcoin mining stocks are showing strong beta to Bitcoin price, but I wouldn't fade them on either side. Why? Because there's the threat of periodic dilution and the upcoming halving, which is going to continue to induce price volatility with Bitcoin mining stocks. So stock dilution, or more commonly known as equity dilution, it's essentially a decrease in shareholders' ownership percentage, and companies do this to raise funds, to cover operational costs, or to grow, but it can negatively impact investor sentiment and price action. And some recent offenders in the mining industry are CleanSpark and TeraWulf, which have an annualized dilution of 116% and 67% since January 2022. And then Marathon and Riot platforms are also dilution offenders. And while the stocks are beta to Bitcoin price, I think that the overhanging threat of dilution and its occasional occurrence could eventually have some investors looking elsewhere, especially as spot Bitcoin begins to pick up steam and look more attractive. So funny thing is, yesterday I was actually looking at Bitcoin mining stocks because they've shaved off quite a bit of their gains, right? And I always try to find some time in the week or in the month or every 3 months to remind myself, add to your winners, add to your winners, add to your positions that have good fundamentals, even if price is down. So I was looking through the Bitcoin mining stocks, and I stopped on TeraWulf and I stopped on Iris Energy. And then I was looking at Marathon and Riot and thinking about adding to those. And I was like, no, Marathon has high debt, Riot has high debt. They're massive. They have big operational cost, and both are known for dilution, as is TeraWulf. But TeraWulf is at least heavily based off of renewable energies. Like 90% of their operations come off of renewables. And sure, they've diluted, but I see much more upside. So I decided against Marathon and Riot and Iris, just because of the amount that I was looking to spend on that day, because of the threat of dilution. So it does impact investor sentiment. Now, of course, today they're all up 20%, but that it's just something to be aware of. So in addition to that, I think that something to consider with Bitcoin mining stocks, as currently they're up 250 to 300% this year, is that the upcoming halving in April, 9 months from now, is going to present some unknown unknowns, right? So only the most efficient outlets or most efficient miners are going to make it. And those would be those with multi-threaded revenue options. They're going to be better positioned. And these like the miners that are reliant on solo Bitcoin mining as revenue and don't have the most favorable power contracts, and I'm talking about below 6 cents per kilowatt, they could struggle. It depends on how efficient their outfit or their mining equipment is. But the party in mining stocks is probably going to continue for those who have a heavy mix of renewable energy resources, favorable electricity rates, and some footprint in the Middle East, South America, or a U.S. state where they can participate in a demand response or curtailment program with like an energy producer or energy distributor. But these miners that have high debt, high capital cost, high operational cost, they're going to struggle. And you'll see this reflected in their stock price as they dilute to pay off debt and raise funds, or fall victim to the rumor of mergers and acquisitions. And after the halving, we're going to see a lot of hash rate volatility within the Bitcoin network. And we're actually seeing right now the trend of incremental bits of hash rate shifting back overseas as sovereigns in the Middle East, Africa, and South America and other areas begin to bring much more price agnostic hash rate online. So some tells will be miners raising funding, yet having high debt, miners who are selling their BTC reserves and their mined Bitcoin in exchanges more frequently, miners curtailing their operation and losing their share of hash rate, miners liquidating older ASIC miners as they rush to upgrade their outfits. Those will all be kind of like tells on which mining companies are stressed and which are well positioned. And then you'll see that reflected through spot price. And if Bitcoin takes off, actual spot Bitcoin takes off, then there's going to be a certain cohort of people that begin to allocate there. And if an ETF is approved, then Bitcoin mining stocks will become less attractive because they'll be less viewed as a proxy investment to Bitcoin for institutionals who at this moment aren't able to allocate to spot Bitcoin. So that's kind of my update on the mining sector and some things to be aware of on the bearish side and also on the bullish side.
No, that's a great way of unpacking all that information. Definitely something to consider, stock dilution, because if you're native to crypto, we sometimes see that as unlocks that can happen where you can be flooded with additional units, if you will. But that's something that you may not be aware of if you haven't looked at traditional markets. I guess, Ray, just in the last minute here, I want to ask you, how feasible is it for these miners to diversify with their existing operations? Do they have to go and invest in new technology and operations to have a diversified revenue stream, or can they redirect the ASIC miners? Because my understanding is ASICs are very specific to the operation that they perform. So it's not like a general computer where you could have it doing different types of activities. So what is the realistic way in which they can diversify their revenue?
Well, that's a tough question. It all boils down to what's your electricity rate, and are you using renewables, and do you have a relationship with a power producer or distributor who you can incentivize to say, hey, you've got wasted power that you're not using, and we can turn that into money for you, and you can turn it into money for me. So if that symbiotism is there, that's something they can tap into. Beyond that, throwing out these older generation miners and upgrading with some of the new miners that are coming out, they're more efficient. So, they consume less electricity and produce more Bitcoin. So that's something that they can do. Establishing a footprint overseas where power rates are really low is something that's possible, but I'm sure that takes a lot of funding. Beyond that, I've heard about some miners using unused rack space to rent it out for people who are looking to plug up GPUs and to train AI stuff like ChatGPT and all that. But that's a little bit of different infrastructure, like the actual electricity, the cooling setup, all that sort of stuff. It's not as plug and play as Bitcoin. So I think most miners who are smart would have been preparing for this at minimum 6 months ago. If they're just doing it now, they're a bit late in the game.
Okay. All right. Well, Ray, I always appreciate you giving a breakdown on the miners. So we're definitely going to have you back on this and be looking at this over the next several months as we move into the halvening. You just presented a very interesting perspective on how really some of the beta that these are offering today may start to change as ETFs come into effect, assuming that they do. So again, something to monitor. And I suggest all of you out there, if you want to hear more about this, you come back every week to hear Ray and the rest of the team be talking about miners and whatever else is on their mind. Whatever's on their radar is worth knowing about if you're in this space. Cody, you've been silent, sitting in the corner, listening to your techno. I'm going to have to bring you on stage. You're going to be talking. You got a couple of projects to like or spike. Cody, are you here? Well, the silence is deafening. Cody, you're going to have to speak up because I'm not hearing you.
Yeah, I'm here. I had my microphone on mute. Sorry, man.
Oh, okay. All right. Well, I know it's because you're bumping and grinding to the good tunes of your German techno. All right. So we've got 3 like it or spike it. We got the very first one. All right. You ready?
Yep.
All right. Let's do it. Following the rise of Telegram trading bots, Telegram creates a mint factory for altcoins. Like it or spike it?
Like it.
All right. Unpack it for us.
So this is actually two main token bots or pods, if you want to call them. So 2 different teams have come up with the same idea, but it's basically the same. You just use their Telegram bot to create and launch a token, and you go on the chat and you have a different set of options to create your token. You can select how many tokens or the supply of the token. You can select how many tokens you want to reserve for the team, if any. You can select how much tokens should be put in the LP on Uniswap. You can choose if there's taxes. You can choose a bunch of different things. And then the token is just launched as an ERC20 token on many VM chains. And yeah, in a sense, it's not great if you see it from the point of view of people can just launch a bunch of coins now. but they've been doing this since
Family
forever.
focus show. Family focus
So-
show. These are excrement tokens that we will call them now
Sorry,
going
lost
forward.
connection, just a second.
So okay, yeah. So we can launch
Yeah.
now a series of tokens that perhaps are meme tokens, or they don't necessarily have the characteristics of high quality grade tokens.
Yeah, that's correct. But it also kind of like allows people that were not technical enough to launch tokens, or didn't want to concern themselves with launching tokens to launch tokens if they do want to. Like, as far as I can see, all these two like solutions are really good. Like, none of the tokens have had like many of the issues that some tokens when they're launched can have. Like, when you deploy a token, sometimes the supply can be sniped by maybe bots. You can there's many ways to kind of like duck it up, and this is a quote unquote sure way of not ducking it up, right?
Okay.
So yeah, from that perspective, it's good. And it's also like they both have tokens associated with the project, and they have a revenue share implemented. So if you hold enough tokens of any of their coins, whenever there is a new token created, or there's certain volume associated with the tokens that are created, you get ETH in fees. So yeah, it's also a really good solution for that. And if they get any chance, like if they get any success, or like any of the tokens that are created through them get successful, the holders of those tokens can get like really high revenues just from holding these token bot.
So I'm imagining already that you're sitting in a room somewhere listening to your German techno and getting on there and just creating all kinds of tokens on the Telegram.
Yeah, like some
Why
of
not,
them.
right?
I looked at some of the names; they were quite suggestive.
Suggestive. Okay, we'll leave it at that. We'll let the audience's imagination play it off. Okay, so that was a like it. Let's move on to the next one we have here. Silo Finance launches Silo Llama Edition, a fork with CRV USD as its only trade pair asset. Like it or spike it.
Like it.
All right, unpack this one.
Okay, so Silo Finance is a lending borrowing protocol, but only for isolated markets. So as opposed to like Aave or Compound, in which you can have multiple markets, and like the lending is kind of like the pools of capital are shared across for everyone. In Silo, you create one lending market for, say, ETH and USDC, and only those tokens are allowed in that pool. And then it's also siloed away from the rest of the pools of capital in the protocol. So the idea is that if one of these silos get hacked, or like there's an issue, they do not affect the other product, like the rest of the protocol. And they haven't had quite the success that I think they were expected to have. Like they were like 30 or $25 million in TVL before this, and that's nowhere near like the billions that Aave or Compound have. But the idea seems quite solid. So like what they're doing now is trying to bootstrap themselves, and I guess Curve USD, by allowing, or like by creating a fork in which CRV USD will always be the second token, or like a token of the pair. So as I said, like you need to create a lending pair in any of these lending protocols, like ETH USDC or wrap BTC USDC. So the idea in this fork is that CRV USD will always be one of these two tokens. So all the pools will be like with CRV USD, wrap BTC, CRV USD, yada yada.
Okay.
And
well, I was just going to say, so it sounds like a good product in that it's trying to firewall itself if there's an issue, there's a hack, but the market just hasn't really, I guess, gotten too excited about it to date. You think that this may actually give it a boost?
yeah, and it will also probably give a boost to Curve and CRV USD. As we said, like last week, it feels like Curve is back, or at least it's trying to make a comeback. And CRV USD is now at all-time highs in circulation after Silo Llama Edition, as they call it, launched. It went up to 160 million in circulation. And also CRV, the token, got a lot of use in Silo Finance because they are also launching with incentives, with Curve incentives. So up until then, there was like less than half a mil of CRV tokens in Silo, which at current prices like, I don't know, $250K, which is not really that much. And now there's like $22 million in Curve on Silo. And that's at like 2 or 3 days, I think. So yeah, you're seeing a huge boost in that, which also relieves the market from some Curve that can be spent. And yeah, it feels like Mitch, like the creator of Curve, might be working behind the scenes to try and engineer a soft landing for himself.
Yeah, that would never happen, right? Okay, so this is an interesting one to add to the list. We have the running list of everything you've liked and spiked that we can bring back at some point. You can review your hot takes and see how they panned out. I think your batting average is looking pretty good so far, but we'll have to monitor this one and see how it supports or takes away from that how well you're performing. All right, let's move to last
if
one.
we're gonna track my performance, sorry, Marconi, but if we're gonna track my performance, then I don't know if I'm gonna bet on Silo. Like I like it because I like the Silo solution, but I'm not sure this will turn the tide for them.
Okay. Well, I think for the audience, good to know as well if they're looking, probably don't want to ape into this one. All right, let's move on to the next one we have here. Pepe creators send part of their stake to exchanges and allegedly sell, tanking the price. I think I know the answer here, but like it or spike it?
Spike it.
All right, unpack what happened here. This sounds like just shenanigans, crypto shenanigans.
Yeah, some of the creators behind Pepe transferred up of like $15 million worth of Pepe from the treasury first to another address, and then they just distributed it to different exchanges. Like half of it went to OKX, 6 million went to Binance, some of it went to Bybit, etc. And allegedly, of course, they sold that, and it caused a drop of 30% on Pepe. It was also very poorly executed. Like everyone could track on chain what was going on. Like it was literally just we move it from the treasury to another address and then just to other exchanges, which caused a lot of people to just either panic, sell, or short because like it was so obvious what was going to happen that it was just like, yeah, of course it's going to go down. Which, yeah, like it also caused a bit of a panic or meme coin contagion, if you will. Not so much on Doge and Chip, which went down like 3 or 4%, but on some of those like up and coming meme coins like Harry Potter, Obama, Sonic, Tenino, which also dropped like 30%. If you're not familiar with this last one, its ticker is also Bitcoin, and it's been making the rounds. It's quite a funny coin, but yeah. But yeah, after selling that, the number of signers of the multisig went down from 5 to 2, which the idea is that like you need like 5 people to sign at the same time a transaction in order for a transaction to go through. And if it goes down to 2, it's like lower security. It might also mean that like some of the creators behind the project just straight up left. Which is not necessarily a bad thing. If you look at Doge, like the 2 creators have been out of crypto for like years. Like the Jackson Palmer is maybe the most famous one. He left in 2015, and like he's been very vocal about not coming back to crypto and like just talking about like all the downsides of crypto. The other creator, Billy Marcus, I think he said that he sold also until 2015 after being laid off, and he used up most of the proceeds to buy a used Honda Civic. I don't know if it's a meme or it's true. I've also seen reports of him like being worth as much as 20 million at the top of the bull market. So maybe he was just trolling, or maybe he just bought back. In any case, I like the Honda Civic story, but
It creates like good lore if even like the founders are like, "This is a scam. I sold it earlier."
Yeah,
and it just
right.
pumps it.
Yeah.
It adds to the meme. Like that's a meme. It's funny.
Like even if they hold any tokens, they've been out of crypto for a while, and like they've definitely haven't been involved in the Dogecoin community, which in a sense kind of makes the meme stronger. It's not dependent on a team behind it. That's also a reason
It was
why
always a
Shiba.
meme.
Yeah. Like if you want a meme coin to succeed, you want it to just be a meme, which might also be like why Shiba is underperforming lately, because they're like the team behind it is trying to make Shiba an L2, and they're not really being successful at it, and it's also losing its meme coin status.
It's the kiss of death because like
Yeah.
you're not going to attract serious people to work on it. And
Exactly. And Yeah. And another thing is
It was
for
the
the
only thing that gave it value, which was the meme.
yeah. And the last thing for the Pepe team is if you want to exit your token, like you don't just send it to the exchanges. You enter an agreement with like a market maker firm, and they will sell it for you, and they will sell it much better than you ever will. So yeah, just
Well,
learn how to dump, please.
learn how to dump. Wow. Well, I can understand why you spiked that one, and it's an interesting concept to think that the meme coins are going to do best when the founders leave, and they do it in a orderly fashion, like going through market makers. I think it's Elon who said something like the most ironic or most comical is what will likely win. So something to consider. But actually,
Something to keep an eye on if we do get another roaring like altcoin bull market next year on the heels of like ETF and all that. I think Pepe will outperform the market, especially because of that. Like if they keep dumping, it just makes it funnier if it were to pump massively.
yeah. So something to
Yeah,
keep an eye on. All right. Well,
it look,
I want to take this as an opportunity because we were talking a little bit at the end of Cody, what you were sharing about L1s and Shiba trying to move into an L1 territory. That actually is a good transition to the conversation about your latest piece. The solution to Cosmos woes is hiding in plain sight, because you're talking about an L1, you're talking about their opportunities. So maybe you can take that article, just unpack it a little bit, and then I want to open up the conversation to the rest of the team and hear a little bit more about their perspective on the futures of L1s versus L2s and what that may look like. So can you just unpack what that piece was about, what you were trying to cover there?
yeah. So the piece was mainly about how liquid staking can be what brings Cosmos back, or like what rekindles the fire in Cosmos. Like they got hit very hard with Luna. Like Luna was the most successful Cosmos chain by far, and a lot of protocols and even other chains on Cosmos relied on Luna's success and like on UST as their main stable even. And of course, when it all came crashing down, then Cosmos was hit harder than basically everyone else. Like TVLs on Cosmos even now are like they are non-existent. Like no one is using Cosmos. I love Cosmos, but like and I think it's a great ecosystem to use. But like the reality is, no one is using it. So you want something to attract people, and like one of the things that can attract people and money is just yields, like high yields. And Cosmos has that. Cosmos chains are all proof of stake, and they have higher yields than Ethereum has. Like Ethereum, you have like 4% yield right now and going down. And Cosmos, it's most like the major chains are like 10, 15 plus percent. And yeah, that will attract people. But the issue with the Cosmos proof of stake system is that you have to wait like 2 or 3 weeks between unstaking and like receiving your tokens. And I think a lot of people got burned at the end of the last bull market because, yeah, Luna was basically the last man standing, and then it took down all the market with it, and people that were trying to sell their Cosmos tokens, they got hit with this 3-week period of not being able to use your tokens. So they got banned pretty hard, and I think liquid staking would enable people to quote unquote trust these systems again and literally have their cake and eat it too, which is getting high yields and being able to use their tokens on chain on DeFi. So yeah, that was the thesis of the piece.
So the solution is right there. It's looking at the liquid staking derivatives as an option. And I want to bring this up because the audience obviously wasn't here. We were having a conversation before we started recording. The question of where do we see this future going? Are we going to see a multi L1 world where Cosmos can be competing with an Ethereum on the yields, right? You just mentioned a basis by which they could be competing, which is based on the fact that you already see Cosmos offering rates that are, 3 to 4 times higher, in some places even higher than that for the yield, and yet they're still not seeing the performance. So do we see multiple L1s coexisting, doing different types of applications, or do we see one L1 to rule them all with a series of L2s?
I think it's path dependent. If we were to have very performant L2s and even L3s or like ZK rollups that are secure and again as performant as Solana or Cosmos, some of the Cosmos chains or like Sui are, then yes, you could have a world in which Ethereum is the only L1 basically, and everything settles on Ethereum. But I think that is less likely than like a multiple of different solutions to exist. I don't necessarily mean that there will be like thousands and thousands of app chains, as some people think, but I think you could have like a series of very successful app chains and then a few L1s that have made different trade-offs. So you would have your Ethereum, which is trying to be very decentralized and like for everyone to be able to validate the network and yada yada, but it's also less performant. And for now, it's like the L2s, they're not like they are better than Ethereum, of course, but they are not as performant as some of the more performant chains like Solana or Sui, and even Cosmos chains are also very very performant. And let's say the bull case for Cosmos and the app chain is that you can change the chain and like in the way that better or like in a way that like it suits your application the most. So that's also why some of the protocols that need to be very performant, like DYDX, which is a futures trading protocol, are moving to Cosmos, and there's also new ones springing up, like Say just launched. So you could have, or like you will likely have some success there, or like some protocols that are successful as a Cosmos chain, which right now is the best implementation you can have if you want to launch an app chain.
Okay, I want to ask Ben to chime in here. And do you share Cody's view that it's about the performance on the network that's going to lead to kind of the path that we're going to see this play out? Are there other factors that you're looking at?
Yeah, definitely. I mean, a lot of what he said, I agree with. But I think one of the key points of what makes Ethereum and kind of everybody else feels like they're trying to catch up to it is that a lot of these DeFi primitives were really took place on Ethereum, gained market share, gained attention, gained a lot of activity. And really since then, everybody's been replicating a lot of those primitives, and it's not necessarily unique. And it kind of asks the question, well, why would I leave the ecosystem that is really vibrant and thriving and really kind of led the space? And that question is answered with people not really wanting to leave Ethereum unless it's for really outsized yields and opportunities. But when it comes to app chains and the ability to, whenever I think of this trilemma issue, it's like you have three dials in front of you, or when you're trying to pick a new character for a game, you can't just put the throttle like to 10 out of 10 on acceleration, 10 out of 10 on top speed, and like 10 out of 10 like on handling. You can't do that. You have to make compromises and trade-offs on what you want to value the most. And app chains allow that, dialing in and tuning the chain to what you want to be the most important issues for what your product is going to become and improve your user experience, like DYDX moving over to Cosmos. That is a real opportunity to really showcase what could be an app thesis and drive a lot of attention away for what was in 2020 and 2021, essentially the EVM compatible L1s that existed. It's a way to garner capital that decides to migrate away from Ethereum to kind of win that narrative over, which is that app chain thesis. So I'm really excited to see what DYDX has, that experience, especially when you layer in the recent activity on wallet connectors, because that really improves the UI UX feel for the users, and it has a chance to showcase just how good of a solution it is.
Okay. I think these are all very good points about where this future can lead. I'm very interested, and I actually lean on you guys to sort of give me perspectives here, because obviously when you're on Twitter or Reddit or Discord or wherever you're getting your information, you can get a lot of maxis that are supporting their own chain. We joke a lot on the show about the Cardano brothers, or obviously Bitcoin maximalists is kind of the main meme, but they certainly exist for all the chains. So I think having something to look at in terms of data and having a framework for what's going to lead to that is to that development and the adoption is powerful and useful. Cody, just as we're wrapping this up, any last words you want? Anything to respond to Ben or to add to it?
Yeah, I would say that like just to clarify, I think the high yields that Cosmos offers for staking can be something that like attracts people in the beginning, but it won't make them stay. Like especially if you look at how they are, like the tokens are performing, like it's literally down only, even if as the rest of the market takes off. So
it's a limited use case outside of yield.
Yeah, that's the issue. Like you need app chains that are successful. Like you need the new Terra Luna. Like as much as you can hate on it, like it was very successful for the longest time. So you need DYDX. You need to say to take the mantle and like prove to be something that people want to use and be successful in their own terms. And only then you can kind of like justify the app chain thesis.
Yeah.
Yeah.
All I can think of is Ben Sustainable Lilly, just looking at every single project and asking the question, how is this going to attract and maintain? I think we're going to have to kick off our show that just dives into those projects and make some recommendations for another day, though. All right, so let's get into the last of it. So for the last segment, I wanted to do something. It's a little different. We usually like to bring on something that's a little bit lighthearted, but everyone here has been through at least this bear winter. Most of us have experienced at least 2 of them. Maybe a few of us have even had 3. So we all have our experiences going through those periods. And today with the Grayscale announcement coming out, it can almost feel a little bit like we're at the end of the winter. The winter is starting to wind down or starting to thaw. Maybe we're starting to look at the spring part of it. But I wanted to ask you guys your thoughts on sort of this notion that this may be, in fact, the longest bear market. There was a tweet that was put out by Scott Meckler, the Wolf of Wall Streets, in which he was responding to a chart that was from Glassnode that put out the number of days. And they said that this was actually the longest winter on record. And so I guess, Ben, as you looked at that chart, what were your thoughts? Do you think that it's true? Is the data accurate? If not, tell me why. And then more importantly, what's your experience going through this winter versus the other winters?
Well, I'd say the fact that he's picking an argument over that chart speaks to how slow everything is. I mean, it's a chart. It shows how long this bear market is. Like, things didn't really, it didn't really feel like winter until we fell off that 6K cliff in late 2018. So I actually side with the chart here and not Scott, because once it was April, as we mentioned earlier, like, it finally felt like we were coming out of this winter, this bear market. And this cycle, it's been longer for sure. There's no doubt about it. And that idea is shown in that chart, like FTX in November. And here we are, and it's almost September now. And sure, we got over the 200-day moving average, but not to the extent that took place in 2019. So this first leg higher that we witnessed this year in 2023, it was a bit muted in comparison to back then. So I like the chart, because it really kind of speaks to the sentiment. And as far as like 2015, I didn't care as much about price. I was more in learning mode and just understanding the technicals at the time. So it didn't really feel like a bear market to me, but it should also be noted that back then, not as many people were building. Everything was in forums. Their companies, weren't disclosing layoffs. Like, there weren't news cycles taking place. Like, things that happen nowadays didn't exist back then. So it's tough to compare to back then. But as far as what that chart's trying to paint, I think it does it perfectly. It's been a long one.
Yeah, it has felt long. JJ, is your experience consistent with Ben?
Yeah, I wasn't around in 2015, so I came into Bitcoin and ETH in 2016, and I was kind of a summer child in that aspect. Which, like, I basically bought it, and then it was up only for like 2 years, and a bit naive to market cycles and whatnot. You just figure, like, okay, it's pulling back in 2018, whatever, it's going to last a few months, and then it's going to keep going up again. That's really when I start to kind of research the larger trends there. But I do remember that cycle just being brutal. And the difference between then and now is back then, there was like a real feeling, especially as it relates to alts and Ethereum, is, will this work long term? Like, did we just buy absolute nonsense? And are we sitting on something that's never going to be worth value? Like, will these things actually come to fruition? And I think what the last bull cycle showed us is that there is like real institutional interest for these things, and actual applications are coming online. So I think the conviction is higher, which actually makes this bear market more brutal, is that we all know it's going to break at some point based on the fundamentals, but it's just not happening, which is frustrating. But I think it's easier in the aspect of, like, there is, beyond a shadow of a doubt, there's fundamental value to these things.
I'll add one comment right there just to add on to what you were saying, JJ. Is not, I wouldn't say everybody, like even the investors that have been around, like sometimes they don't actually think we're going to break out of it. But for those that are actually building and kind of getting their hands dirty, like, you ask them, they have a completely different perspective right now than some of the kind of people that only speculate on the sides.
Yeah,
that's true. There's a lot more optimism in terms of what's actually being produced, which is cool.
Right. The build quality is coming out.
Last bear market, you have to remember that was like ETH could barely handle CryptoKitties without breaking. So it's like, what the hell did we, like, we just kind of
we all know the internet eventually breaks down because of pictures of cats. That's just the nature of the beast. Ray, what's your perspective
On this being the longest bull market ever?
No, the longest bear market, and how you've experienced
bear market,
this winter market.
No, I don't think so. Ray. For me, 2018 all the way. Sorry, I did drift off a little bit. I was thinking about some of the stuff that Ben was saying. And
Yeah.
I agree with him that like
PTSD
builders are
flashbacks.
bullish
Yeah.
sometimes, but I feel comfortable. And you know, like Ben is right. Builders are excited and confident and optimistic and just frustrated by like the lack of regulation and the lack of clarity there, and the fact that a lot of good jobs are getting pushed overseas, and that this like anti-crypto stance that the US has makes it hard to hire. But anyway, back to the bull market thing, bear market thing. My worst bear market was 2018 to March of 2020. That was the longest for me, and I was lost at sea, and still learning about trading and risk management and just how this market works. And a lot of the data that we all can access for free now, and maybe even take for granted, and has become like endemic to everybody's view of how they digest what's happening in the market, was not readily available or as refined or well packaged as it is now, like on-chain data and all the exchange data and all these lovely dashboards that you can go find. So
Yeah, we
I
were
felt like
using Elliott
JJ.
Wave.
What's that?
Rough
Oh yeah,
times.
yeah, 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 yeah. We were
Elliott
all
Wave.
trading like, yeah, it was all Elliott waves and like diamond bottoms and Adam and Eve patterns. You know, it's just everyone had TA. That was it. Like weird TA GAN stuff, moon cycle trading, and the crypto witch. So yeah, that was a long time. I saw a heavy drawdown on my portfolio and didn't really know. Like I still had faith, but I didn't have faith that was driven by conviction and data and fact. Whereas this whole opportunity, this entire downtrend has just been like, here's what I learned that I won't do again, but here's where I know we're going. And there's just so much data that you can use to back your convictions. So in a nutshell, I'm sitting here unbothered, moisturized, happy, in my lane, focused, flourishing.
You've been here
I'm the-
before. You're ready for it this
yeah.
time.
Yeah, focused.
And other lies we tell ourselves.
Yeah, focused and flourishing. I like that. Cody, I want to get your perspective on the experience. Is it consistent with Ben, Ray, and JJ?
I mean, I guess it's my first bear market. I don't know how it compares to any previous ones. I would say it's not felt super long because we've been really busy. So yeah, I guess I sat with the builders here. I'm just like waiting for the skies to clear, but definitely bullish long term.
Okay. I like that. Actually, that's a good perspective for someone who hasn't been here as long, just to note exactly what Ben said. When you're building, you're busy and you focus on what's ahead of you. So I guess I want to just wrap this up a little bit. We just had this news, as we talked about earlier in the show, with Grayscale coming out, having a victory against the SEC and Gary Shades Gensler. Does this, what's the perspective? I want to hear the reaction from you guys. I'm going to go around the horn, get everyone about 30 seconds. But Ben, I want to start with you. What's your reaction to this? Does this mark the end of the winter? Are we looking at spring, or is this just another road that we're going to continue to go for? But you get about 30 seconds.
I would just pull up the Grayscale Bitcoin chart and just zoom in on that candle and just say that one's for you. And then that's about it. And that's all I got to say about that.
That's all you're going to say about that. I think you're going to send that over to Gary Shades Gensler, maybe on Twitter. JJ, what's your perspective on this news?
Yeah, I think there's no way to paint it other than long-term bullish. I think it's just kind of increasing that inevitability that we were just discussing, that it's just a market cycle. We're in a bear market. It's not the end of the industry. And hopefully this is the catalyst that sets us off into a new bull market.
Okay. Ray?
Resistance is futile. Bitcoin is Borg.
Oh, wow. That went dark. I like that. A little scary. And I imagine there's at least a few Star Trek fans in the audience that will know exactly where he's going with that. Cody, you get the last word here.
Yeah, I would say that this just shows or like opens the door for other upside surprises. So if something like a big open interest wipeout with like pullback happens, just do a Ray did and just buy as much coin as you can, because I think this just opens the gate for ETFs to be approved in the near future. And as we come into October and whatnot, I think that starts to be a real possibility.
Okay. You heard it from Cody. It's a real possibility. We're not at all on the fence. All right.
Things might happen.
It may happen. That's right. Okay. There's our conviction for the show. No, guys, I appreciate it. I didn't share my views, but I think it's very consistent with what you guys shared. So it has been an interesting bear market, and it's possible that this is the beginning of the end of the bear winter. But that's going to do it for this week's show. I would like to thank this week's guests for sharing their insights, JJ, Ben, Lilly, Ray, and Cody. Now, if you got something out of this show, a different insight, maybe a different way of thinking about coins or miners, or even the news that just came out of Grayscale, we'd appreciate if you like and subscribe to the show. We're trying to build the audience, get as many of you bear market warriors out there to come join us. And obviously share this with others. As I said before, we're looking for as many of us to be able to profit off the opportunities that exist in crypto, using our risk management, as Ray likes to remind us, and looking at the opportunities that JJ is often telling us about. And for those who are curious, yes, we're getting that much closer to video. I would love to be able to tell you that it's going to be happening next week, but we're having to go and get some more hardware. But it is on its way. And when you have that, I think you'll be amazed by the amount of data that these guys are pulling together every single week. It's a subset of the charts and the graphs and the stories that they're looking at. But when you pull a picture together, it really gives you a really strong narrative of what's important and why, which is exactly what we're doing every single week on Alpha Bytes. It's finding those opportunities today that are going to be there in the future. So with that said, it is a crazy time in crypto, as it always is, and in the traditional markets. As we said, it's a possibility that we're going to see something on the ETF side, but there's also a possibility that the Dixie just roars higher. We don't know. We're doing the very best we can. So you're out there in the market, stay safe, keep your powder dry, and make good, rational decisions. And that's about all I can say on that. So for this week in this show, this is Marconi White signing off.